Hi guys, it's FD for SageFab.tv and good morning, good afternoon, good evening, wherever you are. Now guys, there's carnage out there on the markets. Things are just dropping left, right and center, but in my view, that's not how a bear market happens. If it does, then this will be something new. Hear me out. I want to go through what's happening. I'll give you my own point of view and tell you whether there are some silver linings in all that is happening around us. But before I jump in, guys, I'm not a financial advisor. This information is not financial advice. Please treat it as for entertainment as well as educational purposes. Now, strap in, guys. The drop, what's driving the drops in prices and the cascades. Let's start with the drops and the magnitude and pattern. Bitcoin is down approximately 6.5% intraday, trading around 104,500 at the time of recording from highs that we saw a few weeks back. Ethereum has dropped almost 9% at the time of recording. It's around 3,700 at the time of recording. So some dire consequences. And this is some dire results and some dire performance. This is on the back of what happened almost 2 weeks ago, or probably just over a week, when we had that calamity, which I think was triggered or initiated by centralized exchanges and some insiders from the Trump administration. I think those two parts, there is something dodgy going on. Whether they're colluding or not, I have no idea. I'm not privy to that information. I just have my suspicion, and they only remain that suspicion. And as for altcoins, they're bleeding harder. Many are down 10 to 30% in hours, depending on leverage, liquidity, and sentiment. And this is on top of the crazy drops we experienced last time when we had those liquidations. You're talking of almost 20 billion liquidations, well, going for 2 weeks now. Market cap across crypto is dropped by tens to hundreds of billions in a very short time span. I'm talking of just this morning, no recording. And what are the triggers and underlying causes? There could be many. I will just cover some, but there could be many. Talking of geopolitical shocks or macro shocks, news of tariffs on the Chinese. I know this is old news, but it can still play a role because that subject hasn't been addressed yet, and Trump is yet to meet the Chinese president Xi Jinping or something like that and discuss or try and resolve their differences. And one side of that equation is temperamental and it can go either way. Then there are liquidations and leverage blowouts where a wave of long liquidations got squeezed and now you've got loads of short. There is a bunch of shorts on the other side of the equation. So if that is what's happening, it can only give us some comfort, because what happens when there is that short squeeze, the price will explode from where we are. So maybe it's that last collapse. I have no idea, but somewhere in the middle, I think. And some people are taking profits because they're thinking maybe we've been around these highs for a while now. Maybe this is the top. It'll be down to them. That's what they are identifying within the markets. They're trying to take profits. That's to be expected. And we are also looking at weak supports that are being broken, and there is technical stress. Key support levels are giving away, triggering algorithmic selling and stop runs. So there are so many players within the market. It's not just us. So those are things to take into consideration. Institutions might be hedging, or there are panic flows where people are taking, some market players are taking some of their liquidity off the table, indicating fear of deeper declines. There is also broader risk of concerns within the environment. Traditional markets are under pressure, bank jitters, credit risks, and equity is volatile. So crypto is not immune. So we don't need to look at crypto in isolation. It doesn't exist in a vacuum. But to look at the wider picture. But if you want to look at the wider picture, you got to look at the wider picture, including everything in it. So we'll cover that later on. Please keep watching and like our video and subscribe if you're not subscribed already. Moving on to structural vulnerabilities that may be exposed or are being exposed as we move on with the markets. We talked about too much leverage. The system is fragile when a large fraction of participants are over leveraged, and there were so many people who were leveraged. The liquidation that happened a week or so ago, it affected both shorts and longs. So there you go. And there's also thin liquidity in the altcoin market where there are low volume pairs, big orders in thin markets amplify price moves. So we had some altcoins dropping to as low as less than a penny. You're talking of Atom for Cosmos. That's a respectable layer 1 blockchain, or layer 0 as they want to call them. And it going below a penny. If you caught that, you're lucky, very lucky. And you may have just put in a cheeky bid, but in most cases those bids, they are not fulfilled because the system just ignores them completely because of whatever mechanisms they use. There is also correlation with other risk assets, and crypto no longer acts as an independent alternatives but behaves like high beta equities. Some will say altcoins are like your meme stocks, and those, they are extremely elastic when it comes to price movements. And then hyper narrative stretch. I think the hyper narrative stretch should address things like your treasury companies who've been buying Bitcoin as a treasury asset, and some going into Ethereum. Those people, they were coming in for the bigger gains or the large gains, and now they might be panicking and selling up. And some of them, their shares are actually trading a lot less than the assets they hold on the balance sheet. So they don't have any more money to keep pumping into these assets. The only thing they can do is maybe sell their crypto, buy their own shares, or to actually improve their cash flow. That could be a factor as well that is happening out there. I mean, if you start seeing everyone shouting 100x coins and stuff, cracks start appearing. And there's also potential coordination and tactical selling where whales are manipulating the market. They might just be doing that to make sure they shake as many people as possible before price explodes. Because what's happening right now, it looks so choreographed. It does not feel like it's actually the collapse of a market into a bear market. I could be wrong, but those are just my own opinions. I know when you are looking at the 4-year cycle, we are way past where we should be, but things have changed. So what are some of the positives? Well, I did allude to shaking of weaker hands earlier on. This page pushes speculative and sound leverage out. That tends to strengthen market base. Only more committed holders remain. Then there's also better entry points, a reversion potential. If this is a reset, it gives us as investors opportunity to buy projects we believe in, but we're overextended. Volatility breeds opportunities. Yeah, it does, especially if you're a trader. But if you were banned last time with leverage, you're not touching leverage for a while. Why yet? Yeah. So for nimble traders, swing trades, volatility plays, arbitrage, short-term and derivative positions. Yeah, they might be seeing opportunities. And it might also be time to refocus on fundamentals, because so many projects with real product adoption, partnerships may get reevaluated more fairly now that hype subsides. So there will be most of the projects that are collapsing now, it might be that they lack fundamentals. And what will be left after this shakeout, it's not just shakeout of investors, there will be some Ponzionomics-based projects that will be shaken out of the market and they'll collapse and never come back. We've seen that happened during the earlier parts of the bull market, where most in gaming and NFTs and metaverse, they will never come back. I'm not going to say names, but I'm sure if you watch our videos week in, week out, you'll probably know and have an idea of what I'm talking about. Networks that survive such a shakeout is what's happening now may earn stronger reputation. Demand for their tokens will be seen as safer in terms of crypto to hold, and also the decoupling of narratives. Some sectors like AI, privacy, identity, infrastructure may decouple, outperforming the dip if narratives shift. So if gaming was serious and there was interest, this could be the time to actually go against the trend and actually just start exploding. Maybe that could be the light we've all been waiting for, but I don't see that happening. Because the likes of Beam, Superverse, Gala, and so many of them are just collapsing left, right, and center. And Beam is probably approaching another all-time low again. I don't know what's going on with that project. So many decent products they are launching. I don't know whether those projects are not set up to support the Beam token. The Beam that I'm talking about is the gaming layer 1 on the Avalanche network, formerly Merit Circle. So are we entering a bear market or just a reset? That's a question most of you guys are asking, and I just want to give my 2 cents on that. And the way I'm reading this is we are likely somewhere in between. Not a definitive bear cycle start yet, but the risk profile is much higher. And to help us with that, let's break things out between the two sides, bear market and just resetting. So let's start with the arguments for a broader bear market. Well, the drops we are seeing at the moment, they are sharper and deeper than a typical correction, cascading liquidations amplified. If macro stress intensifies, we're talking of rates hikes, banking crisis, credit tightness, crypto suffers, but at the moment it's the opposite, isn't it? Or it's mixed. Rates might yet increase again. There is an indication of some banking crisis. Credit, on the other hand, is being loosened. So I don't know which picture this is going to develop into. And if price support fails at critical levels, for example, Bitcoin below key zones, I think we're looking at, if it drops below 104 and cannot end the day above 104, we are then looking at 96. If it drops below 96K, we are heading into the doldrums. That's my take. If it drops below 96K, it is heading into the bear market. That's my take. But I could also be wrong at the same time. No one knows exactly what's going to happen. I'm just giving you my take based on what I'm reading in front of us. Institutions hedging, if they are, that may suggest many are expecting more downside if they are hedging their positions. And many altcoins will likely suffer heavy losses. Some weaker projects might fail. We've talked about that. Some started failing because the bull market did not come in time. And in most cases, most of these things is about the timing. And that's on the argument for bear market. Let's look on the other side of that coin then. Is it just a reset within bull market, which will mean this is just a healthy correction? Let's look into that. The overall bull structure remains in place unless key trend lines break decisively. So it's not a case of of just wicking below it or dropping below and then completing the day above it. No, even some weekly metrics, they are still looking good. They are not indicating a weakness in the structure of the markets. It might be so on the daily, but we are waiting for some confirmation on the weekly time frame. At the moment, it's not suggesting that. If macro stabilizes or policy eases, crypto markets often rebound sharply. So fundamentals of many leading projects remain strong. Upgrades, adoption, and develop activity is also on the rise as we speak. On-chain metrics may still indicate accumulation zones or supports. So the safest assumption at the moment is this is a deep correction within an extended bull market, but it can morph into a bear if supports fail or macro breaks worsen. Let us know what you think about that, guys, our take on that. And how am I monitoring this, and how will I be able to tell if this turns into a bear market? Well, I'm looking for sustained breach of key support zones in Bitcoin and Ethereum. Is there sharpened divergence? If new highs fail but lower lows begin, that could be an indication of a bear developing. Our funding rates go deeply negative for long periods of time. That could be an indication of the bear market. And capitulation volumes and wick and reversal candles develop. That could be an indication of a bear market under development as well. If the drops in active addresses start showing up, or new development in TVL outflows, macroeconomics, you're talking of interest rates, credit spreads, bank stress, regulatory changes. At the moment, the changes that are happening on the regulatory front, they are favoring the markets, but you never know. So I'm thinking if 4 to 5 of these align bearish for multiple weeks, that's not a reset, it's a trend change. So you cannot just make a decision whether this is a bear market or not just by looking at daily price changes. You got to look at it from a weekly time frame, and you got to look at multiple weeks, not just 1 week, because it could be a reset within a week, and then after a week it just shoots up. That's what happens. And what am I doing, or how am I planning to position myself now? Well, given this environment, the balance stance is prudent, and I'm no different. You see, if I'm going to be doing any swing trading, I've got to tighten my stop losses, use trailing stops in open positions, and I'm also going to be looking at reducing or using zero leverage exposure if you are into trading, that is. Lock in partial profits if you got any winners. Keep dry ammunition, you're talking of stables and fiat, ready to deploy on oversold dip. Try and identify projects you believe in. I've got some that I believe in, and I think I did share some not long ago of the projects that I think if we ever experience a massive dip like we are going through now, or if we enter a bear market, I'm eyeing this project, trying to do that, and I'll be using DCA or dollar cost averaging. So do as much as you can to help yourself and stay nimble. Avoid overcommitting until trend confirmation. Watch macro news flow closely. Policy shocks could accelerate direction. So if Trump comes out of his meeting with the Chinese president and he says something crazy, the markets could be wiped out. That could be possible. While today's drop is ugly, it is not a fun market. It's a reminder that crypto is still wild, levered, and vulnerable. But here's the truth though. If you fear the storm, you will never learn to sell better. This could be the first gust of a bigger bear, or the reset you want to buy into the next leg. The difference will be in how this behaves from here. Whether support holds, sentiment recovers, and capital flows in again. You win this game not by predicting perfect tops or bottoms, but by managing risk, staying flexible, and being ready to act when the panic gives you your best entry. Today's dive hurts, but it also opens doors. Let us watch closely, protect what matters, and be ready to swim with the next wave. Let us know, guys, what you're doing during these challenging times within these crypto markets. Are you rushing for the exit, or are you consolidating your position? Let us know in the comment section. Until the next one, guys, FD for SafeTrap.tv. Signing out for now. Bye.